Good morning, everybody. This is Jason Bowman, and I'm joined today by Dan Henn. How's it going, Dan?
Good. How's everybody doing out there?
I know I am well. A little colder than you are, but
Yeah. Well, we hit 75, and this is usually where I ask people, can you hear us? And if so, tell us where you are and what's the temperature like. I'm sure it's not 75 unless you're already here in Florida with me.
let's see. Right now it is 34,
Yikes.
and I love it. So can everybody hear us okay?
Yep, there we go. We got a few replies. Rainy in LA,
Heck yeah.
George in Orlando, close to me. 25 degrees in Idaho. There you go, Jason. Somebody who's actually colder
Awesome.
than you.
So
60 in Vegas.
let's go ahead and get started. This is our IRS Collections Representation Level 1 class. And in particular today, we are going to be talking about the mechanics of IRS collections casework. Dan, can you explain what I mean by mechanics?
Well, basically, again, it's the overall, what we're going to talk today is the overall process of, how you, we're not going to talk, we'll talk some marketing things here and there, but the overall, when you get a client in the door, what the process is from what you should be looking at and how you should be kind of analyzing things. So ultimately, it's just how you're working it from our perspective as the preparer. We have a different class that we have taught in the past of a 2-hour session of looking at it from the taxpayer's perspective and how it, just from the standpoint of how you can explain it to them. Because again, we talk technical world, which I don't know if you want to roll to the next slide, Jason, but that's a good thing when we talk the acronyms and things. And if you're new to this and we talk a lot of acronyms, please let us know. But ultimately, we're going to give you the basic overview this week, and then over the next coming weeks, we're going to go a little more detailed in a couple of different areas that you will help you to work cases and probably deal with things you've already been dealing with, but you just didn't do it in the formality that we're teaching it.
Yeah. I mean, really, we want you to leave today with an understanding of the structure of an IRS collections case. I'm a strong believer in systemizing everything. There should pretty much anything that is repeated multiple times in your practice should have a checklist and a process associated with it. And the nice thing about most of what we do is it's all very formulaic. There's a lot of different branches that we can go off on, but most of what we do is very formulaic. And so as tax professionals, our profession itself lends itself very well to systemization. So that's what I want to make sure that you leave today with, is a solid understanding of, from your perspective, how to work a collections case. So we're going to start with the very beginning part with account research and financial analysis, because those are the things that determine what resolution options somebody is eligible for. And then we're going to work through the resolution process itself and then end with compliance monitoring, best practices, and that's where some of your service cross-sells and upsells come in handy. Dan, do you want to tell the world about Randy and Heather?
Yeah, now, probably just because of time, we usually do this in the case study when we do the live classes.
Right.
But because Randy the Realtor, we use him as an example as we'll talk through some of the various things over the next few weeks. But Randy the Realtor is a prime, for those of you that may have dealt with realtors, you know that they are self-employed, they get paid with the 1099, especially early on for most of them, but there's even some that just never get it, and they they make good money, but they don't pay the taxes, and then they always get caught behind the 8 ball. You know, in our example, Randy is compliant with most of his returns. He's just not paying his taxes.
Right.
So that's where he's a good example, but it's not uncommon for somebody like him to go a year or two or more where he hasn't filed taxes. So we're just giving you some examples or some numbers here that we will try to go through and explain as we go through the process of how somebody like Randy is a good candidate, which lends to kind of the marketing aspect as well. You know, where do you find people who are in need of the tax resolution work, because it's hard to get them sometimes by referral because that's not something they're normally going to be talking to family and friends about.
Right,
so.
Right. So Randy's just kind of an avatar or a stand-in for what is a fairly typical 1040 debtor. And keep in mind that throughout the next 3 weeks, we are going to be exclusively talking about 1040 debtors. We're not getting into 941, 940, excise taxes, etc. Just to maintain a clearer separation there. So as you can see, Randy is not a high earner necessarily. He's just in a situation where, as a 1099 sales professional, he doesn't make his estimated tax payments, and so he ends up with a liability. Also, Randy's ex-wife is the one that took care of the family finances, and she uprooted her entire life to go marry a circus clown, and as a result hasn't paid child support to Randy in 6 years. So that can become a material factor in tax resolution cases. I do need to put up the first polling question. There we go. 2 times 3 equals 1, 1, 1, or 1.
Yes, I always absolve claim to anything that has to do with the polling questions, everyone. If you are familiar with Jason and his questions, it only gets better from here.
Well, it's one of the few ways we have to try to keep CPE entertaining. During the polling questions, we can.
Well, there's your circus theme to go with Heather Heartbreaker.
15 seconds on the polling question. If you're here for the CPE, hit the submit button. Again, if you're here for the CPE, be sure you hit the submit button. As I fall into a fake Italian accent.
Yeah, okay.
All right, closing the polling question. 5, 4, 3.
Yes, they do, George. They do have legalized marijuana in Jason's home state.
All right. And of course, the correct answer to the question was 6.
He's in one of those Northwest states where they're very liberal with that kind of stuff.
Yeah, I'm in Washington. All right. So what exactly does a collections case look like? You know, you're probably used to tax returns, and you know that a tax return has a very well-defined flow to it, right? Because it's a form, and everything that feeds into the form has to pretty much go in order. For example, you can't put, can everybody see the slides?
No.
No? Uh-oh.
No, it's just got your mug on it.
My mug?
Yes. It's just the opening header screen.
How about now?
There we go.
There we go.
Good.
Thanks, Amit. What was I saying? Oh, so you know that a 1040 is a very structured approach to a thing, right? Because you have to have the income on there before you can calculate the tax, before you can calculate the credits, right? So the entire form flows, and you have to do it pretty much in order. Well, tax resolution is the same way. There is a process to it. and it's just a circle. The circle of tax resolution. So it starts with understanding the taxpayer's problem from the IRS perspective. So I call it investigation of liability. Most people call it transcript analysis, conversation with the revenue officer, etc., trying to figure out what's actually going on. Next is the financial review. In all but a few situations, you're going to do a financial analysis to determine what the taxpayer is able to pay, okay, or not pay. Because if they can't pay, you need to be able to prove that. Okay? Then based on the investigation of liability, what the transcripts say, what the RO says, based on the financials, that determines what resolution options are available to you. And then as you're working towards that resolution, you have to understand the IRS side of the process, works with potentially with some other divisions of the IRS, including appeals. And then if you're doing an installment agreement, you got to look and see if there's a reasonable cost penalty abatement to knock some of the penalties off at the end. And then there's monitoring, which includes service upsells. Anything you want to throw in there, Dan, on that? Just the big picture?
Yeah, I mean, this is just a big picture overview. We're going to go through each of these steps in a little more detail over the rest of the time we have together here, and give you some, even some things, comparisons to a 1040. There are some, but keep in mind that what you know for a client's 1040 is not necessarily what you know when you're going through this process.
Right.
With 1040, I mean, we know where they work. We know that they have a house, they have their real estate taxes, mortgage interest, but when we get into this, we'll see more in detail that we need to know how much is their house worth, what loans they have on their house, what the income of any kind of type, which includes VA benefits that are not taxable, or child support, alimony, all of those things that, some of those things that may not be taxable. And so you'll see that, it's good to know the 1040, but when you're doing this analysis, it's going to be, you're going more in depth and really getting to know your client.
Absolutely. There's a different
things
level of familiarity. Go ahead.
No, I was just going to say you'll probably learn things that you didn't want to know.
Oh, yeah. Plus we get to play therapist. That's always the fun one.
Yeah.
So real briefly, the fiscal year 2016 numbers are not out yet. I'm chopping it to bit to see them. So here are the previous year numbers from fiscal year 2015. Just to show you how big of an opportunity there is, within the whole sphere of IRS collections representation. So there were over 8 million new collections cases, which was over 400,000 more new cases than in the prior year. We started 2016 with 13.3 million open IRS collections cases, over 900,000 more than the prior year. And I'm willing to bet that we started fiscal year 17 with, probably closer to 14.5 million, just a guess. Over $137 billion in outstanding tax penalties and interest. And note, this is actual assessed tax penalties and interest. This is not the tax gap, which is an estimate of underreporting. No, these are actual assessments.
Can I ask you a question?
Go for it.
Of all those cases that are out there and people that are looking into getting into this, how many cases of those would you really need to be making a decent living at this?
Well, define decent living and what expenses you have.
Well, obviously that's different for everybody, but if you wanted to make, let's say, $10,000 a month doing something like this.
Yeah, you only need to bring in 2 to 4 cases a month in order to, make a 6-figure income. So,
right. So, ultimately what I'm getting at is you don't need a lot of cases, and you can see there's a lot of them out there. It's just a matter of finding.
Yeah, there's millions of them out there. And keep in mind, about just over 60% of them are actually business cases. But that still leaves millions of these individuals out there. Most 1040 tax debtors have on average between 3 and 5 years of delinquent returns as well. So there is a tax preparation opportunity there. And you can charge higher fees for preparing those back tax returns. And for people that question that, the way I legitimize it is, it's hard enough keeping up with your tax knowledge for the current year, right? Now, doing delinquent returns, you have to stay knowledgeable about multiple filing years, okay? That's why you could charge a premium for those returns. Note that the number of liens that the IRS files has been going down. That was because the IRS Fresh Start program changed the filing threshold from 5,000 to 10,000. And then also the IRS has a budget problem. They have to pay money to the county clerk and recorder in order to file these liens, okay? And so the IRS has had less money to do that. Number of levies being issued is going down, but still a lot. I mean, 1.5 million levies, that's a lot of levy action. And then probably the most important thing I like to remind people of, remember I mentioned back here that they closed out 7.1 million collections cases, okay? 27,000 of them were through the offer and compromise program. That means 0.37% of cases were resolved via an offer and compromise. That's less than 1%. The offer and compromise does not equal tax resolution. Too many practitioners think that the two are equivalent, and they are not. The vast majority of your cases will be resolved through a payment plan. Any thoughts, comments here, Dan?
No, I mean, just the biggest thing is, most people know the whole tax resolution world as, I pay pennies on the dollar, offer and compromise, and the point is that you see there statistically that that is a very small fraction of the people who actually qualify for that. So you more than likely, unless you really, really do a lot of these, you won't probably see a lot of offers and compromise. So that's why I think Jason mentioned last week or over the last couple of weeks that we don't spend any time on that at this level, but we do an offer a compromise course later.
Right. Yeah, that's why we don't cover it in level 1, is because because of this right here. Time for another polling question. I brought back some classics, Dan. How do you keep a bull from charging?
Well, hopefully for most people on the webinar, this is the first time they're seeing these questions and get a good little chuckle in the middle of tax season on it. I've seen these things about 15, 20 times already.
95% of the vote is in. And no voter fraud, you people. George says, I need to write some new material for Jason.
Right, yes.
10 more seconds on the polling question. Be sure to hit that good old submit button.
And Jason, I don't know if you were wanting to record this, because it doesn't look like it's recording.
No, it is.
Okay.
Or at least I hope it is. All right.
Well, it just says not on mine end, but that's fine.
So you already saw this. We're going to walk through each of these steps so that you have an idea of what they are. So again, investigation of liability, that is understanding what the case looks like on the IRS side. Financial analysis determines most of the resolution options available to the taxpayer. We're going to look at some of the moving pieces on the IRS side. We'll look at appeals briefly, and then we'll talk about penalty abatement and monitoring. Well, let's start here. So this is where our client intake process starts after we have closed the sale, okay? And so you'll notice that at the start of this checklist, there's not, get power of attorney signed, collect retainer. get your engagement letter signed. In my world, that's all part of the sales process still, okay? So this is after you have the 2848, after you have your engagement letter signed, okay? We move into the actual casework side. And the first place to start is the transcript analysis. Investigation of liability is the fancy phrase. What I do here is either call up the tax practitioner priority hotline and do it over the phone, or send your power of attorney into the CAF unit and wait the 4, 5, 6, 7 days so that you can pull up transcripts through e-services as long as you have transcript delivery service access. And for those of you that do not have TDS access through e-services, you're going to want to get it if you are doing tax resolution. So sign up for that ASAP. But either way, the whole point is to get transcripts. Sorry, Dan, go ahead.
No, sorry. It just beats snail mail any day of trying to call or trying to get a fax from the practitioner hotline, and because you only can do 10 per call, and so yeah, it's definitely a lot better.
Yeah. Now the transcripts that I'm requesting are every tax period that is owed for, the tax periods in between, and the tax period the year before and the year after the problem. So for example, if somebody owes for 2011, 12, and 15, okay, they owe for 11, 12, and 15. I'm requesting 2010 through 2016. I want the year before, the year after, and everything in between. Okay?
Right.
Because I want to see what their compliance looked like in the in-between or the year before and after. You want to be able to look for patterns, in the returns, what changed in the years that they owed money, right? So I'm usually going to want the full kit and caboodle, all right? You want the entire record of account. You want the return transcript and the account transcript, and that's combined in what's called a record of account. For 1040 debtors as well, you'll want to pull wage and income transcripts. That will basically include all the data from 1099s and W-2s that were issued to the taxpayer for any particular year. And you're going to go through the account transcripts in particular, looking for some very specific things. First of all, was the return filed? Was it filed on time? Was it an IRS prepared return, an SFR, substitute for return? When were representatives taken on and put on and taken off? Was a final notice of intent to levy ever issued? When was it issued? Are you within 30 days of that being issued? If so, you have appeals rights. Are all payments that the taxpayer says they made, are they properly recorded on the transcripts? And then what I also like to do for clients is to break out the amount of tax, penalties, and interest that their liability adds up to in total. And you can cheat and have either your tax resolution software do this for you, or request a payoff calculator when you call the tax practitioner priority hotline, and it'll give you a grid with all that broken out. But I think it's important to show people this is how much your tax was, but because you didn't pay it on time, you've doubled your liability. Okay. Also be sure to identify the collection statute expiration date. When does the 10-year statute of limitations for collections end on this tax period? And then also for any notices. Any notices that the taxpayer should have received, we want to verify that administrative processes were followed properly. Otherwise, we have some really strong arguments to make in appeals. Dan, any thoughts on this part of the process?
Yeah, and I just, the only comment that I have is really, there's not any important part here. The CSED is going to be, is actually kind of, if it's anything on this screen right now, it's probably one of the most, because it helps you make certain decisions whether a client has the stomach to ride out the CSED. Is there, are you, is 30, 60, or less than a year on it, or are you just 7 years out? And that's why it's important with looking at the transcripts, when a return was filed, when an SFR was filed, did they file a bankruptcy? Did they file an appeal? Have they gone into an installment agreement 3 or 4 times? Because each one of those things adds time to it. And so it may seem like, hey, you might be, nearing in. I had somebody in one of the live sessions when I went to West Palm. He showed me a transcript, and based on when it was filed, we were literally within 30 days. But I said when I flipped through it, he had 2 different bankruptcy postings, and I don't remember what else was on there, but 30 days just for an installment agreement is added every time they get into one.
Right.
So it's why it's important to review the transcripts and know the CSED, and even if you use a software like Jason says, I personally use the Canopy Tax, and it's really awesome, but you always need to just still verify, just like with the tax return program, you still got to really verify and make sure that it's still doing the math, because there are glitches that happen, and ultimately you're going to be the one held responsible if things aren't what they say they are.
Right. We have some questions come in. CSED stands for Collection Statute Expiration Date. That is the end of the 10-year period during which the IRS can collect the debt, and after the 10 years, it poof, magically evaporates. 1058 dates, what I mean by that are you'll look at the transcripts to determine the date on which a letter 1058 or LT11 was issued. That's a final notice of intent to levy. You have a 30-day window after that notice to appeal the notice of intent to levy. SFR, substitute for return. So you want to look on the transcript and see if there are any substitute for return 6020Bs that the IRS did, so that you can determine whether or not to replace those returns. For collections purposes, it is a valid return, and you have to determine whether or not you're going to bother replacing them or not. Again, CSED, collection, statute, expiration date.
Right, yeah, and it's, it's important, for those of you that haven't dealt with the SFR, that, and those usually happen at best 2 years down when the original return was due. The computers will say, hey, this client should have filed a return. They make attempts to mail it to the last known address, but it's there and it sticks, and it makes the clock run from the standpoint of the collection statute. You still haven't filed a return, so technically they can still come after them from the assessment statute expiration date, the ASED as we call it. But that's what the SFR is, a substitute for return. That's just a return that the IRS will create because they didn't file one, and because they, based on the numbers that they calculate, they had a 1099 for $20,000, and based on that they should owe a tax. So it will calculate that plus the penalties and interest, and unfortunately that becomes a hazard, because then they'll file, potentially file tax liens and things like that, and then people go to sell property or buy property, and it becomes a problem.
Yeah. Moving on to the financial analysis. This is the most important part of the process from our standpoint. Making sure that you get all the financial information in from the client, which can be like, herding cats, because I don't want to give the financial information. But the thing that people need to understand, and this is the analogy that I use with them, is that they need to think of the financial analysis like they would a mortgage application, because they took a quote-unquote unauthorized loan from the federal government, and now we're applying for a payment plan to pay it back. Okay, put that way, people tend to get why I need pay stubs and bank statements and copies of mortgage statements and copies of returns and all that stuff. Okay. Forms 433A, B, and F, that is the collection information statement. A is for individuals. F is the individual version for when you're dealing with ACS. It's the simplified form for the ACS folks. And then 433B is for businesses. And basically what goes on here is a determination of what's called reasonable collection potential. In other words, based on your current financial condition, what can we get out of you? Okay? And it is based on IRS national standards and local standards for certain expense categories, like housing, utilities, food, transportation, all that good stuff. And some of these are nationwide, some of them vary by location, and that is what we'll be covering all of next Friday, is all about the financial analysis, okay? But you're looking at income from all sources. You heard Dan mention earlier, even non-taxable income, such as VA benefits. Randy and his, if Heather ever starts paying child support is not taxable income from a tax return perspective, but it is income that can be used to pay a tax debt. So you have to kind of take your tax return hat off a lot of times when you're doing a 433 A or F, and we'll talk extensively about that next week.
We get a whole 2 hours just on that one slide, or an hour and a half on that whole one slide.
Heck yeah. Doesn't that sound like a good time, boys and girls?
Yeah.
Next polling question, 10 divided by 2. Is it 3?
Well, you
4?
You finally got the answer on the slide.
5? Or 6? And yes, the correct answer is actually on your screen.
Now, Jason, I want to address a couple of questions that have come across.
Sure.
Michael asked the question here, what would you charge a client if they are better off to let the statute run out, no work was done other than analysis? And it's difficult really, or we really not supposed to be talking fees, but to give you a range, you could charge as little as $250 to $1,000 or more for that, because you got to meet with them at least once up front and probably once on the back end. It's going to take you time to pull transcripts, to do your analysis, to actually come up with a plan to say, you can qualify for an offer in compromise, but it's going to do this, go into currently uncollectible, whatever the situation may be, but you're 6 months from the statute, and can you sit it out? And your time is worth something, so make sure you're billing accordingly. Edward asked, when do the stats really start? I'm assuming you're talking about the statutes. And basically, once the liability is established. The liability is established at the point in time when you file a return, they owe money, a substitute for return, they come out with more money in an exam, an IRS audit. So anything that adds liabilities to it starts a new clock. Mm-hmm. So if you had all of those situations, like maybe there was a substitute for return and you filed a return and added more money to it, and then later it got an exam where there was added more money to it, those are 3 separate clocks.
Right.
That you have to be calculating, and based on all the other factors that can stop that clock, that 10-year clock, that's where you have to do that analysis. So, but those are good questions, guys. Keep them coming.
Christine asked, does a client need to disclose assets in a foreign country? Absolutely. Absolutely. Is that all of them?
Yes, and we'll talk a little bit about some foreign aspect of that next week when we deal with the financial standards and the forms that we fill out.
Yeah. So based on the financial analysis, that helps us determine what I call a resolution pathway. And there are only a few directions you can really go. And the place to start for, especially for folks that owe more than $50,000 to the IRS, we're going to look at the assets. Okay, the IRS can require somebody to dispose of an asset or to borrow against it to cash out equity and turn that money over to the government. Okay, so the first place that we're going to often stop, again, especially if they owe more than $50,000, or a business that owes more than $25,000, we're going to look at the assets. You know, can we borrow against the house? And if they haven't maxed out penalties and interest yet, it's going to be cheaper to take out a home equity line of credit and pay off the IRS than it is to rack up the penalties. So early in our resolution process, we're going to want to get loan applications submitted to at least 3 different banks. That way I have loan denial letters sitting there waiting for me when I need them. Okay, so if there are any assets with equity, then the IRS may ask you to tap into that, so have those loan application denials waiting. If you're going to sell an asset, you may need to go through a lien discharge or subordination process. And again, that's a level 2 or 3 class by itself for 2 hours. But you can't just sell something that's covered by an IRS lien. Next week, Dan will be especially talking to you about this, which is how do we maximize our allowable expenses and minimize our income? Because the delta between those 2 numbers is what the IRS expects in a monthly payment if you're doing an installment agreement. If the taxpayer has no assets and no disposable income, then they may be a candidate for CNC, currently not collectible status. And then if the sum of their assets plus their disposable income over 1 or 2 years is less than the amount of their debt, they might be an offer and compromise candidate. Anything here to add, Dan, on these?
No, I mean, ultimately, this is kind of what you're doing in your analysis to at least do some preliminary and help them guide them, because ultimately, again, it's the 3 installment agreement, currently non-collectible, or offer and compromise, and again, there's the CNC offer and compromise installment agreement are normally a 2-hour course that we just teach in and of themselves, plus liens, plus appeals, and we try to go in, a fair amount of in-depth in there, but you really have to know how to start with this part.
Yeah, absolutely. Dan, why don't you talk about appeals?
Appeals. Okay, sure. Many times when you you've gone through the pathways. So Jason just explained that. Installment agreement, currently non-collectible, offer and compromise. So you've done one of these 3 that he's just put back on the screen, and there are going to be times when the IRS says no, or they may give you a qualified no, or they may ask for things that may seem unreasonable, or because every case is in and of itself different. People. I always use the example that you can have people who own a house, they work at the same job, make the same exact money, be married, have kids, have cars, but they can totally be different as far as how their stuff, when you get into the details, are different. Some may have a child who went through some drug addiction and they caused them to be in that kind of a problem because of that. Or they may have been sick themselves, or they just may have just chose not to file, and now they have a reason that they need to file. So based on your ultimate resolution or what your answer is, and when you file it, sometimes they say no. So appeals can be your avenue to trying to get those resolved. They have a whole separate group of settlement officers. They have more, when you're dealing with these types of cases, you're dealing with an RO, which is a revenue officer, as opposed to an RA, which is a revenue agent. When you're dealing with a revenue agent, that's on the exam side. Revenue officers are on the collection side. So settlement officers, get they can get promoted there. They can get promoted, say, from group managers. But these people have a lot more experience and understanding, and they have authority over the revenue officer. And your two choices are the collection due process appeal, and this is, if you get the no answer, you send it up the flagpole to appeals, and you make your case there to a live human being sometimes, or I would say sometimes, as I like to say, a Grinch that grew a heart, 5 times bigger, because they tend to, have more common sense, and they can help you get those resolved. However, as it says there, it often can take months to get your case heard. So when you file an appeal, this is one of those clock stoppers. So you have to be careful in how you do that and make sure that you've got your case set up and your facts and circumstances that you can do. They typically in appeals don't like to hear new information, because if you have new information, it should be going through the RO first, just like they do in exams. They don't like to hear new information directly in appeals. They want you to deal with the exam side. But that's there. Now, if you actually have your client who comes in with their hair on fire, that they've whacked their bank account, or they're whacking their paycheck, and when they whack the paycheck, sometimes it's 70 to 80% plus of their paycheck that's getting whacked. So they come in running in with their hair on fire and say, hey, what can you do? And you go to the CAP program, the Collections Appeals Program, and generally I think it's somewhere within 2 to 5 days or something they're supposed to be able to have somebody hear the case, because when they file a levy on your bank account, the bank has 21 days, and I believe everybody has 21 days if they're going to hold monies from you or from your client, and so that's your your avenue to try and stop that levy. And if you're going to go through that, you deserve to be paid for that, because again, dealing with appeals, dealing with liens and levies, I mean, you can make a living at just dealing with those and people who have that aspect of things. So, this is a, kind of the, I'll call it sort of a get out of jail free card. You can keep that in the back of your pocket if the situation arises, your offer in compromise gets denied, you can go, and go through this process. But again, that's where you have to determine statute, your collection statute, and a few other factors just to make sure that you're trying to give your client the right advice.
Yeah, these are tools that are there for you to use on your client's behalf. So the CDP and the CAP, we cover these in level 3, I think it is.
Yeah.
Level 3. Okay. They're important tools to have in your back pocket. I would say about 50-60% of all the cases I've ever worked were resolved in appeals. So it kind of defeats the purpose of field collections, but it is what it is. So penalty abatements. People always want to know about penalty abatements. Clients want to know, how can I get the penalties reduced? Can you take the interest off too? Everybody wants, at the end of the day, they want a deal, right? The thing to bear in mind is that if you get somebody into currently not collectible, the penalties and interest continue to accrue. Okay, you're not getting a penalty abatement in a non-collectible situation most of the time. You can, they're rare. I don't even bother. In a lot of times in a non-collectible situation, they're going to be in non-collectible status until the clock runs out on the 10 years. Okay, and they're never going to pay a dime on the liability to begin with. All right, so the accumulation of the penalties and interest isn't an issue. If they're getting resolved through an offer in compromise, the offer in compromise resolves the entire tax, penalty, interest amount. Okay, penalty abatements only really come into play when you set up an installment agreement, which is going to be 75% of the cases you work once you do a volume of these. Edward CFF is collection field function. the installment agreement is set up, and after you make 2 or 3 payments, to demonstrate that you are moving past the prior problems and that you're going to be a good little taxpayer, as I like to say, then we look at a penalty abatement under reasonable cause criteria. And I separate this from the first-time abatement. Anybody can pretty much get a first-time abatement. Those are not a problem. And you're going to have a lot of taxpayers that aren't going to have a reasonable cause argument to be made. They just didn't pay their taxes because they were broke. That's not one of the allowable excuses. Although there's ways that you can massage that are beyond the scope of this slide. I have an entire 2-hour class on that. But you know, if you're beyond the first-time abate criteria and you have one of these reasonable cause arguments that you can make, it's worth pursuing. It is possible to get the entire amount of penalties removed from somebody's tax bill. Okay, the entire kit and caboodle, and with that. Also decreases the interest charges because you're assessed interest on the penalties, right? So don't ignore the possibility for a penalty abatement, but also at the same time you have to make sure that your client actually has a good excuse. And these on your screen are the most common. Somebody couldn't attend to their business affairs properly. Because either they suffered a serious illness or somebody close to them did that caused either mental anguish, or they had to take care of them physically, or somebody dies. That's reasonable cause. Alcohol and drug issues, those are some of the more interesting penalty abatements to write, but also some of the most successful. If records were destroyed and the taxpayer couldn't recreate them, you know, because of a tornado, or I got into the tax resolution business just a couple years after Hurricane Katrina hit, and we had a lot of clients from Louisiana that this was the issue. The reason that they're several years behind is because the hurricane wiped out everything. And so they had no records, and they just stopped trying to be compliant after that. If there's criminal activity, you know, somebody is embezzling money, there's fraud, perjury, anything like that going on that led to the non-payment of the taxes. Okay, great excuse. This one is hard to document and prove. But if you can prove that that somebody at the IRS told you to do something a certain way, and you did it that way, then you can have an argument. Slightly easier to prove, but still difficult, is reliance on professional advice. And the reason that one's hard is because ultimately the responsibility for compliance is always still on the taxpayer, right? So, yeah, trying to prove the IRS or professional advice is difficult, but I've done a couple of those. And then there's undue economic hardship, which I could talk about for 2 hours, full thing beyond the scope of this presentation, but there is a way to convert the argument of I was broke and didn't have enough money, and that's not a legitimate excuse to pay your taxes. There was a way to massage that into this creation of undue economic hardship under the revenue code that can get you out of the penalties. On the 941 side, there is this whole conversation to be had about the exercise of ordinary business care and prudence, and how even if you have to make arguments similar to the undue economic hardship, you have to make the argument that a drop in business was unforeseeable for some reason, and that if you'd paid the taxes instead of something else, it would have caused you know, permanent economic hardship or harm to you in the business. The IRS is attitude on the 941 side is that if you can't afford the taxes for an employee, then you shouldn't have the employee. Any thoughts on penalty abatements, Dan?
Yeah, I didn't hear if you touched on it, but like with the criminal activity, the one thing that you got to be careful there is just they actually have to prosecute. So if there's not, if a lot of times there's family relations where the whole problem was caused by a family member. If they don't prosecute, then that's not a viable excuse.
Yeah.
Edward here asked, what about mental illness? And yes, that would fall under probably the serious illness, because again, that does happen midstream. And then Frankie asked here, what about a former CPA had major illness and didn't file returns on time? That one should more than likely be able to get you out of it. But again, as Jason said, it's still up to the taxpayer to make sure that they're following up and doing things. And I had that particular situation myself about 3 years ago. I had a CPA here that had gotten ill. He went into the hospital. He was battling leukemia on March 31st. We got involved on like April 4th, and we extended everything that we could possibly do. But ultimately I didn't acquire the practice, so I don't know how it ultimately ended. But that would be a viable excuse that you could try to get somebody out of penalties. And then Ishmael asked about penalty abatement at the beginning and then later, and generally you just do it once. You're doing all years involved, and usually it's once you get the case resolved.
Right.
Ultimately, if you're getting an offer and compromise, it's all included. When you're doing installment agreement, we just like to try and say, get 2 or 3 payments under your belt, and then that would be an easier argument for trying to do that. So just kind of answer a couple of questions that came along there. So
yeah. Next polling question: what do cows read? This is still my favorite one, Dan, because it is the worst.
Yeah. This one was probably one of the better ones that you had of these.
Let's see. Frankie asks, is there software that helps confirm penalties and interest? Yeah. Audit Detective from Tax Help Software. Canopy has a transcript analysis module. Pitbull Tax has a transcript analysis module. There's that, I can't remember the name of it, IRS something. They have a transcript analysis module. What's that?
Is it IRS Solutions or something like that?
Yeah, the new kid on the block, IRS Solutions. They have a transcript analysis module. IRS Logics is the only one that doesn't, I think. So yeah,
and then there used to be Beyond 415, but they got acquired by H&R Block. So
yeah, well, that didn't help with penalties and interest.
No,
that did something else. Former CPA had major illness, didn't file returns on time. Yeah, I've had a couple clients that they thought that the CPA filed the returns, but for some reason they never actually did. And there you just need to have signed affidavits. It's about as best as you can do. How do I request penalty abatements? I always send a letter and a fax. Can you explain a PPIA? That is a 2-hour class by itself. We will talk about installment agreements in our 3rd session, and we'll briefly touch on PPIA to close out level 1.
Eli, I have taught that whole course, and we have spent a 2-hour plus on just talking about that particular topic. That is kind of a little bit of a different animal when you're dealing with the aspects of installment agreements, but we do touch base a little bit.
Yeah. All right, let's talk about account monitoring. After I get somebody fixed, so we've negotiated the resolution, they're making payments on their payment plan, or they're sitting fat, dumb, and happy on their $100 settlement on their for an OIC on their $40,000 liability. Then we have to make sure, now that we got them unscrewed, we want to make sure they don't get screwed again, okay? So I call this account monitoring, and this is an upsell, okay? This is a service that, in order to keep my power of attorney active beyond the closing resolution of the case, they have to pay an additional fee, okay? And I always did it as an annual fee. And depending on the taxpayer, $1,000, $2,000 a year, not unreasonable at all, okay? And then what I did is every quarter I would go into e-services and I would pull transcripts. Most of my cases were 941. So doing this quarterly made sense. And basically all I was doing is making sure that they were paying their installment agreement payments. They weren't pyramiding, meaning that they weren't adding additional tax debt in new tax periods. Make sure they were making their federal tax deposits, or on the 1040 side, in like Randy's situation, you're going to want to check and make sure he's making his estimated tax payments. And then make sure that returns are getting filed. Okay, those are the big things that you want to look for. And then also, if any notices come in, you're going to advise them on what the notice means. Most of the time, you can say, this is just a reminder that you owe money, ignore it. Okay, that's what the majority of them are going to be. And then obviously, you can also provide advice on maintaining compliance. So this account monitoring is an upsell for your tax resolution work that most people either they don't do this at all. For some reason, they just don't think of this as a service, or they don't close out their power of attorney, which has some liability issues associated with it. Your E&O provider will prefer that you close out your powers of attorney, by the way. But a lot of people just don't think of this as a service, don't offer it, or they include it as part of the original service fee, even though it's not really part of the original engagement. Okay, this is a separate engagement for the account monitoring, but it has a lot of value, especially for business clients or self-employed people like Randy. Any thoughts on the account monitoring, Dan?
Yeah, this is one of those where I recommend it to people. I mean, you kind of talked a little bit about it, about revoking your power of attorney if you're not going to do this, because and people usually ask why. Well, it's a liability because what happens when we file a power of attorney? Well, we get copies of all the notices, and if these notice comes in and your client taxpayer say they move and they no longer get these notices being forwarded to them, and then you get the notices but you didn't try and contact them and let them know, that is one of those where you can be held responsible for not. I mean, that's the way that they can sue you. And Teresa asked FTD, Federal Tax Deposit is what FTD stands for. But here's where if you continue on and maybe a lot of times if you're doing tax resolution work and maybe you're doing tax prep work, you roll the client from one to the other, and now you do tax planning and how do they avoid, like maybe if they're going to try and write out the statute, but there might be a year or two left. How do you help them manage that they're not going to lose all their refunds if they can? Do some tax planning. If they file an offer in compromise, this is very important, because if they don't stay on a straight and narrow for 5 years, then all bets are off. It's a legal binding contract, right, that you've signed with the government, and if you don't meet the parameters, then guess what? That all comes back. The part that they said we're going to let go away, and you just pay the pennies on the dollar. So it's very important that that you try to upsell this. Federal tax deposits, that's on the payroll side. So if you have somebody who maybe they got into a problem, you got them connected with a payroll company. I mean, how many times have we heard those stories of a payroll company not making the tax deposits? So they've taken the money from them, and so they think it's being done, but it's not. So this is where you can review that to make sure that it is being paid And if not, then if you're doing this on a quarterly basis, then you can try and cut that off of the past before, because that's the whole part of this, is that, 1 year in and of itself is usually not too bad for somebody. It's that they keep doing it, and quarters of payroll taxes or years of tax returns add up, and that's what becomes and makes it so unbearable, unmanageable for people. So it's important that you try, especially if your client is in an installment agreement. I've seen it happen. I had a client, it was actually somebody that Jason had referred me to. It was actually a friend of his that he just didn't want to deal with on that side of the ball. And I ended up dealing with the guy, and the whole reason that he got into the whole problem, he had set up an installment agreement, and when he went to go file a return, the guy who prepared it, when the return got submitted, it either got denied or it never came through that he was taking the foreign earned income exclusion, and it caused him to owe tax when the return that got prepared showed that he was due a refund. Well, when the new liability hit, it terminated the direct debit installment agreement, and he kind of just forgot that it had happened, and he didn't find out for, I think it was like a year that had happened. They tried to file an amended return. A year and a half went by, and the amended return never got processed. So that's kind of a thing that you're trying to figure out and help people with this monitoring.
Absolutely, and John's case was excellent case in point on this. And Dan already talked about this. That's why I advanced the slide. But other necessary services. So your average 1040 debtor has 3 to 5 years worth of unfiled 1040s. So there's some tax prep work. On the business side, there's always going to be payroll and bookkeeping work. Probably some write-up work as well. There are the ongoing monitoring services, and like Dan said, account monitoring leads to tax planning. Okay, and then there is the lifetime tax preparation as well. If you fix somebody's tax debt problem, they'll be a client for life. Okay.
You are a hero.
Well, yeah, exactly, absolutely. You are a hero in their eyes. So that is what I have for presentation. We've still got some more questions coming in. I'll put up the next polling question. Go ahead.
Yeah, I just want to add a couple of things on this, because for those of you that maybe say CPAs and EA, this is a good marketing aspect of things that, here's where you can, if you get into this, not every EA or CPA does this kind of work, that if you can have an agreement where if you have this, explain that you have this experience in your networking circles, or even if you deal with other unenrolled tax preparers, maybe you send them some of this tax work, and you get the much higher paying tax resolution, because sometimes they can't deal with that. They can do the tax returns, but they can't do the representation aspect of it.
Right.
Turn the guy who's having payroll problems into a payroll client. So there's many ways that you can turn this into recurring income, where in general tax resolution is obviously, I always call it like chasing the next kill, like most attorneys do. But in this case, you can turn it into recurring work, which is one of the nice part of tax prep work, is that it always comes back. It's kind of like having a membership program. And I don't know if you want to deal with Robert's question there.
Sure. I just wanted to say, I don't think we've ever finished this topic in an hour. Did I miss something?
No, it's because when we do this as a live session, this whole thing takes me almost 2 hours in and of itself. That's not 2 CPE hours, that's 2 full hours, and then some.
Yeah, not
and on top of that, yeah, we usually add the exercise on top of that, but still, I could talk, on a lot of the things that Jason has talked about, even more so in depth.
Okay, it felt like I missed something, or we should be
it's just
20 minutes
we're
behind.
not doing live. we're not doing the live class, and we're not having as many interruptions. Not that the questions are interruptions. It's just it sidetracks you. And
That's true.
Jason does have the shiny object syndrome and can get down a rabbit hole tangent. So.
Yeah, Robert had a couple questions here. How are we supposed to get paid from these deadbeat taxpayers when they do not have money to pay their taxes? That's a sales question that would be beyond the scope here. I am doing a free series of webinars that is going to cover exactly those kind of things. So I'll mention that here in a little bit, Robert. How do these companies that say if the taxpayer owes over $10,000, they can reduce the debt owed to the IRS? Is this what your webinars would teach us? How do we compete with that? Let me back up to this slide right here, Robert. Oops.
You're still on the poll question.
Oh. Boop. Okay. You see slides?
Yes.
Okay, Robert. Down here, in fiscal year 2015, the IRS accepted 27,000 offers out of 67,000 submitted. That's an acceptance rate of 40%. Okay? The reason that these 60% were rejected is because they should have never been filed in the first place. A lot of them are being, or the majority of them are being submitted by taxpayers that either can't read, they can't figure out the forms properly, or they're submitted by these offer mills, these companies that say everybody can settle for pennies on the dollar. Okay, a lot of those companies, they're fly-by-night operators. They're selling everybody an offer and compromise and submitting invalid offers, and then saying it's the taxpayer's fault when it doesn't get accepted. Okay. So hopefully that answers that question. My offer and compromise acceptance rate in my career is 100%, and so should yours, because you shouldn't submit an offer and compromise application until you've done the calculation to determine whether they're eligible, because it's very black and white on the calculation. RCP is less than debt or it's not. I mean, that's the calculation, okay? When will I be doing a marketing webinar? So I'm doing a 5-week webinar series on Saturdays, starting on February 18th. You can go to taxresolutionmarketing.com to register for that.
Tax Marketing Q?
No, taxresolutionmarketing.com.
Tax Resolution Marketing, okay.
I'll put that in the chat window here. And that's a free webinar series on Saturdays. Do you have a sample engagement letter? Yes, but sorry, not sharing it here. Dan, anything else?
You have that in
any of these topics?
No, I mean, again, at this point, everyone, if you have any questions, just go ahead and keep, asking them. We'll be, we've got at least another 5-10 minutes to be on the call here to help you guys out with some of these questions. But this is just meant to be a basic overview today. Next week, we'll be talking about the IRS financial collection standards, and then the following week, we'll be talking about installment agreements a little more in detail. So it does get a little bit more meaty. Hopefully you guys appreciate the information. Hopefully can handle our as I always tell people, I try to make this dry tax stuff as entertaining as possible. So hopefully you guys you're okay with our teaching style. We try to. This is a new thing that we're doing in the tag teaming on one course. Usually he'll lead one, I'll lead one, kind of a scenario. But yeah. So again, if you're really interested in this, I would definitely encourage you to stick with the technical education. Look into the marketing aspect as well that Jason's going to be teaching because it's all very helpful information. These clients are out there. Some of them will easily just, nicely fall into your lap, and now you know how to deal with them and get paid for it. Because again, as we talked about in the webinar, the simplest thing that you can do is get paid for getting somebody into an installment agreement. Not a $50 $94.65 if you even charged anything for it. For some people, they can be billing as much as they did for the tax return just to get into that. And the reason being is that you guys are taking the time to be here. That is worth something. You're dealing with clients, you're building experience that they don't have, that you know how to do. There's a reason that Jason's offering compromise rate is 100%, because he's got the experience about that, and he can obviously tout that. Now, even if it may be 10 cases, I'm sure he's probably done a few more than that, but if it was only 10 cases and he's batting 10 for 10, that's still 100%.
Yep.
And so, and unfortunately, a lot of these, offer mills, as Jason called them, they are selling people on something that they really had no business being in the first place. And granted that most of these people don't know any better, and then they don't have good follow-up, or things fall through the cracks. And that's why it's important that you guys understand the processes and procedures, and understand, as Jason said, the former naval nuclear engineer guy who understands processes and procedures in a written form, that it's important that you guys, do the same thing, because it can very easily that happen to you if you don't follow the process and procedure, timing of things. And we'll talk a little bit more over that over the next couple of weeks. But any other questions out there? There hasn't been anything that's come in for a couple of minutes. Now's the time to ask.
Since we have a few minutes left, let's go over the exercise real quick.
Okay.
Just because we have some time, and everybody let's do like a minute a question. If people type your responses into the question box there. What sources of information can we tap into to research Randy's tax debts? And Dan, don't say anything yet. Give people a second to type in a response. So when we're doing the investigation of liability, what sources of information are we going to tap into to research Randy's tax debts?
Is this where I sing the Jeopardy theme?
Ba-da-ba-dum, ba-da-ba-da-bum.
So we're getting some good answers there.
Yep.
We've got a few. Amit, Frankie, Teresa, Robert all said transcripts. That's a good one.
Indeed. Yes, transcripts are your friend. And you can get them either on e-services, tax practitioner priority line, mail in a form and get them by mail. Yes, Diane, good point. Wage and income transcripts. Indeed.
Yeah, and then Mark says IRS letters, notices. That's another one. That's some good information.
A lot of clients are going to throw those away, but hopefully if they keep a few of them, often unopened, those can be a good source of information when they bring those in. Yeah,
that always it surprises me, but yet it doesn't. They come in with the W-2s or the organizer that I mailed out, and it comes back still unopened.
Right. So yeah, good stuff. All right, so
Amit says tax detective reports. I guess that's
you audit detective.
That's a different issue.
Why do we need to review Randy's personal finances? What is the purpose of the financial review? What are we going to get out of that? Give you a minute to type in an answer. Why the financial review? Why are we doing it? Why does the IRS do it? What's the purpose of the financial review? Frankie, yes, absolutely. Teresa, yep. Stuart, yep. Ability to pay. That is the entire purpose of the financial review, is to determine the taxpayer's ability or inability to pay. Okay? What we get out of it is a determination of which path we're going to go down. Offer and compromise, non-collectible, tap into assets, borrow money from friends, family to pay it off, CNC, etc. What role do tax returns play in the process? Our avatar, Randy, he hasn't filed his 2015 return yet, and we're already staring down the barrel of 16 returns. So what role does the tax return play in the process? I don't think we actually talked about this. This is one of the things I may have skipped over. But what's the importance of the tax returns? Ishmael, yes. See if anybody else can get that. Yeah, Christine, that's another good point. So 2 reasons. All right, so 1, as Christine pointed out, and I wasn't thinking along this line, but yeah, to determine the correct tax liability. If there's no tax return filed, then we don't know exactly how much he owes. The big thing, and most of you got this, is that yes, all tax returns have to be filed before you can get into a resolution, okay? Current and compliant. You should learn to kind of sing-song that. Current and compliant. Everybody with me now? Current and compliant. Current and compliant. Exactly. Your taxpayer has to be current and compliant. They have to be current with their filing requirements and compliant with federal tax deposit or estimated tax payment guidelines, okay? So, yeah, Robert, yeah, just getting them on board. I mean, that's what it is. What other actions might we want to consider in order to fix Randy? If you refer to his situation, I'll put this back up. Okay, he's a full-time realtor, divorced, has custody of his kid. He's just an average broker. What else are we going to want to consider for fixing Randy? Think about what could alleviate his entire problem. Mark, yeah, a budget, totally. Even without seeing his expenses and whatnot that we'll get into next week, even without seeing that, yeah, budget. Rich, different occupation.
Yeah, I love. Yes, I mean, and sometimes, Rich, that might be the thing that you might want to get them. Yeah, Mark says give him a therapist.
Get him a therapist.
Unfortunately, that's sometimes what we are, and what we, part of the hidden part of our fees sometimes. Teresa and Frankie really got the answer there with making estimated payments is really where we need to get Randy, and we'll talk a little bit about that next week on how that can substantially make a difference. Yeah. But helping them with an overall budget, that could be another thing. Again, that's an extra service in and of itself.
Yeah.
And I like trying to get them.
I like to get people like Randy onto a payroll service. I really do.
Right.
Set them up as move them from being a Schedule C, create them an 1120 S situation, get them on payroll. Okay. That's the path I prefer for those folks. What are 3 things that we're going to want to ask Randy when we meet? Based on just the scenario that you've already seen laid out, again, based on just these 2 slides, basically, what are 3 things that we're going to want to ask Randy about? Dan? What would you say?
Randy, what's your problem? Why? I probably wouldn't phrase it in that. I mean, if you're a blunt person, you probably would. But I always tell people, at the end of the day, I don't care what got you into the problem. I'm not here to judge you. It's just I need to know, because that can help with how we respond and deal with the case. So one of the things I said to Randy is like, hey, what happened? Tell me, why you haven't filed in a number of years or whatever. I mean, like I said, many of the cases that we had before that we talked about, as far as family member having problems, lost a job, there could be a number of reasons. I had one guy that came in, and you hear all the stories. I'm sure many of you, if you prepare tax returns, I always say, it's because we're dealing with trusted information. People will come and dump their lunch on my desk about everything else, medical problems, family history, all that kind of stuff, and you'll hear the story about how they got found on the lawn after doing major binge of drugs and how they got put in a rehab for 14 months, and that was one of the reasons. They were making good money and they weren't paying their taxes. So that's one of the things I would ask them.
Yep, absolutely. You want to know the backstory. And that's not only just to get people comfortable with you, build that know, like, trust factor, which is important in the sales process, but also that's the basis of your penalty abatement down the road. Okay, so it's helpful to get that information up front. All tax correspondence last filed federal and state returns. Mark, yes, absolutely.
If they have them.
If they have them.
Yes.
Yeah. Income forecast, expense forecast, absolutely. Copies of any notices. Where do we go here? I'm going to want to see copies of any notices. I'm going to want to ask him about who prepared returns in the past, why he's not making his estimated tax payments. I'm going to ask him about the regularity of his closings. Is he only selling houses 5 months out of the year? But in certain markets, there is no seasonality really. Like here in my area around Seattle, there hasn't been much of a slowdown even as we head into winter. But seasonality could affect Randy's options. You're going to want to ask about any changes in his business, any changes in his life, his lifestyle, anything like that.
And Michael's got a good one there about, the states. I mean, does he have state issues? I mean,
Correct.
Here I'm in Florida, and I generally don't have a lot of that, but I had a guy who moved down here that a Wisconsin issue followed him, because it happened to be in the year that he had a large, in the mortgage industry, ended up losing his job and having to dip into his retirement and didn't do it right. So, and we'll talk a little bit more about that next week, Michael, on how we actually really deal with that. Did you want to address Simon's question?
Yeah, he asked if we go into the sales process and stuff in the marketing class, what documents to collect, fees to charge, etc. And yeah, in the marketing webinar series, I'll be going into that towards the end. Probably week 4 and 5 out of that. So yeah, any other questions? We've hit our time requirement. I'll close down the last polling question, the one that I need to really get rid of because it's even bad by my standards. What happens when a fraud's car breaks down? It gets towed away. Wah, wah, wah. So yeah, we've hit our time requirement for CPE. Any other questions?
Yeah, let us know what you thought of this. Was this helpful? Give us a little bit of feedback. We appreciate that. Is there something we could do a little bit better, or in that process? Because we're here to try and help people. Help you, help other taxpayers deal with the system that we all know is very complicated. And despite people talking about tax reform, it'll get easier for a brief period of time, but it still will always be complicated. We will still always have jobs. So this is where it's very important to try and understand of. I mean, a lot of times I tell people here, you're going to expand your knowledge, your ability to collect fees here because a lot of this stuff, some of this stuff some of you've already been doing, you've just been giving it away for free. So just helping you capture some of these nickels and dimes that add up, I think will be helpful there. Thanks, Amit. You know, he said he picked up some nuggets, and Diane, thank you. We appreciate you being here. Looking forward to next week. Thank you again, Clint, too. And Teresa's asking for a little more detail in the notes. Well, it's hard. We don't want to make the slides too busy, but and James, the slides, there's a link in the handout section of the right poll when you're in the go-to webinar here. So then we got that there. And then did you want to, Clint asked about Orlando. Did you want to talk about that at all, Jason, at this time?
Yeah, we can. So, I mean, and it's part of the reason that we're doing this level 1 class in February, right? Why are we trying to be out there selling CPE during the middle of tax season? Well, it's because after tax preparation season, there's about a month and a half gap, and then what I call second tax season or tax resolution season starts. So in June, you start getting the statutory notices of deficiency, the bills for the 1040 returns that were filed right now. Okay, so you know, in June, when new tax liens start hitting, and you get this wave of 1040 tax resolution work to do, you need to be ready for it. Okay, and the time to be learning the technical material is not in June. The time to be learning the technical material for what you need to know to work those cases come June, July is right now. And then to start firing up the marketing is really what you want to be doing immediately after the end of the filing season. And so for Orlando, the event in Orlando that we're doing, there will be some advanced technical stuff that we'll be talking about. And let me just pull up the actual description here. So on the first day, on May 9th, we'll be covering technical stuff. We'll talk about appeals, lien, withdrawal, subordinations, discharges, and then we'll spend all afternoon talking about building up marketing funnels, okay? Because it all starts with your lead generation funnel, right? Then Wednesday morning, I'll be doing a tax resolution technical update and a marketing update. We'll talk about an advanced strategy for dealing with 941 issues that I call the new company flip. This is how to properly move the business operation from one entity to another and avoid the alter ego nominee assessment. And then on Thursday, we'll get into trust fund recovery penalty and worker classification cases, and we'll spend that entire afternoon basically doing sales training. So that's what you get in Orlando, May 9th, 10th, and 11th. And please note the price that's up there at the top of the screen. That price is today's price, and next month it becomes a different price, which it'll go up by $100 every month.
Higher.
Yeah, it'll be $5.99 after. Yeah, it goes up by $100 every month. So keep that in mind.
Yeah, and that lovely picture, we spent 2.5 days. I went up to the Seattle area north of where Jason is, and we presented to 70 CPAs and EAs up in that group there. Yep. And a few of them have become members of our program and stay in touch, and you know, really have taken the bulls by the horns and really gotten into dealing with this and making some good money at it.
Absolutely. And so yeah, the next couple of weeks we'll lay the technical foundation for you to come out to Orlando, and then if you attend the free Saturday tax resolution marketing series that I'll be doing, that'll give you a good foundation on the marketing side, leading up to attendance at the leadership conference. So that way, if you attend both sets of, both these tax technical and then the marketing sessions, by the time Orlando rolls around, you'll be well suited for attendance then. Amit asks if I'm going to do a West Coast one. What I'm doing with the leadership conference is I'm alternating sides of the country. The first one in 2015 was in Atlanta. Then 2016 we did Las Vegas. 2017 we're going to Orlando. And then 2018 I'll probably do Los Angeles. Not set in stone, but yeah. So I mean, for marketing wise, this is the marketing event of the year for tax resolution that I do, and I also think it's the best, even though there's a couple competitor type things for the marketing stuff. From what I've heard about those, every session is a sales pitch for a product or service. These conferences that I put on, they're not pitch fests. Yes, you'll have a couple vendors offering some of their products, but it's not every hour you're getting a sales pitch shoved down your throat. You're there. The fee you're paying is not to be pitched to, in my opinion, for these kind of events. So,
right.
Yeah.
And the live session is really good because it helps being a little more interactive. Sometimes it helps us stay off on the timing, but it helps answer the questions you're having when you're having the questions.
Yeah.
We don't profess to know it all either, and sometimes there's people in the audience that have had different experiences. Maybe they've been an IRS agent or revenue officer before and can add a different perspective. So that's one of the things that's nice with the and networking. Because many of us are around the corner. I mean, even George on the line here, he's in Orlando. I mean, you could say we're kind of competitors, but we're at least 40 miles apart. So we're all about trying to help each other. Do things, and ultimately at the end of the day, it's trying to help you guys achieve the dream and not being a slave to your practice, and learn how to do things the right way, and trying to reach people, help them, and ultimately help you achieve whatever goals it is you're looking for: financial, retirement, spending more time with the family. That's ultimately what we're really looking for in doing this. But if you're anything like me, having liking to help people to go through the swamp, as it's called, of IRS issues, regulations, and things, it's very helpful. Although George now just said that he's got a client in Rockledge, so now I don't like you anymore, George. That's where I am, but no, that's fine. To me, there's plenty enough people to go around. Jason showed you the statistics to start with. And there's plenty of people out there. You just got to find them, and that's what we're here to help you try and do.
I'll have CP certificates for this session. I'll put those out over the weekend, just so you guys know.
And Jason, there was one question about getting the slides in advance. Is that something we can do?
Yeah, I don't think we're changing much. Next week's slides we need to update for any changes to the national standards. I haven't looked at those in a few months, so we need to look at that, and then need to add in the new streamline IA criteria. So I know there's some changes, some updates to the slides we need to make. So let's chat about that. But yeah, we can do that. I'll have the replay up tonight or tomorrow, and the slides for today as well. Although you can grab the slides from the handouts pane there and go to webinar as well. So anything else when you go over?
Okay. Well, thank you, everyone. I appreciate it very much for being here. Thanks, Jason, for letting me be a part of it.
Thanks for being here. And Dan, congrats on the adoption, and I hope everything goes smoothly with your meeting and all that today.
Yep. I appreciate that. I'm getting ready to dart out here to go see my 3-year-old little girl that we're still in the early stages. So if you're a praying person, appreciate the prayers to have everything go smooth, and appreciate that.
Cool. Well, thanks a lot, everybody, and have a wonderful weekend. We'll talk to you next Friday.
Great. Thanks, Jason.
Take care.
Bye.